good day, and today's lesson is going to be the trial balance. Now, if you remember, the trial balance is a list of all your debit balances and your credit balances. How do you know which is debit balances and how do you know which are the credit balances? Basically, based on double entry rules. I don't know if you remember the double entry rules in terms of Alice. So remember our rules. The rules were, how do we know what we debit and what we credit? Based on the double entry rules, where your assets and your expenses are debited and the liabilities, income, capital credited, and the opposite side for the decrease. For your trial balance, you only look at the increase column. So to know what you are putting on which side, it will be assets and expenses, debit column, liabilities, income, capital, credit column. Once you memorize this, that's it. You just follow those rules, okay? The accounts, the real and personal accounts, with your balance brought down on the debit side would be your assets and your expenses. Now, sorry, let me correct that. Your balance brought down for personal and real accounts would be your assets only. The expenses, which is also a debit balance in your trial balance, would be the amount that you transfer to your income statement. So once again, the trial balance is a list of all your debit balances and your credit balances. Where you would get the balances would be from your ledger accounts. Remember when we did the balancing, where you got your balance carried down and then your balance brought down. So the balances that ended up on the debit side, balance brought down, will be your debit balances. And the balances that in your accounts when you balance, the balance brought down was on the credit side, that will be your credit balances in your trial balance. So it is a list and it is based on double entry rules. Balances debit side, balances credit side. So you would see the rules here, because in an exam, they're not necessarily going to show you the ledger accounts. So you're not going to see the side that the balance brought down is on to know which column you're going to put it in the trial balance when you prepare the trial balance. Same thing for your nominal accounts. You're not going to see the actual ledger account to know what you're transferring, the amount you're transferring to your trial balance. So basically, you will have to depend on this rule. All right, where assets would be under the debit column, expenses will be under the debit column, and liabilities, income, and capital, they will be under the credit columns. It's as simple as that one. Somebody pointed out that it's like a sandwich, right? Which I have used as an analogy in the past. The assets and the expenses, the first one in Alice, the first letter, and the last letter or last item in our rules for Alice would be like the bread, right? The bread. And then they are the debits, and then everything else in between in terms of Alice. So the L, I, and C, liabilities, income, and capital, is like your ingredients that you would put in a sandwich, right? Like the meat, the vegetables, the whatever it is, the cheese, whatever it is that you usually put, those are your credits. So I think it's a nice analogy. Only problem is that you kind of get hungry when you use that analogy. So after the lesson, go and grab something to eat if you're as hungry as I am right now. And just to clarify more, the balances for your real and personal account, which would be your balance brought down, goes in the trial balance under the relevant column, and the nominal accounts, which would be your expense and revenue or income accounts, it will be the amount that we transfer to the income statement when we close off those accounts. So you're memorizing that, however you used to memorize it. Very, very important. It's important in double entry, and now you're going to see it is very important in terms of your trial balance when you're looking at mainly the increase column, as we just did. So here are the steps to preparing a trial balance. The first step that I usually suggest is to write the rules. Remember what I said, the increase column, debit for assets and expense, and then everything else in between, liability, income, capital, credit, credit, credit. So yes, memorize it, but strong suggestion, you have memorized it. As soon as you go into the exam and you see prepare the trial balance, jot it down somewhere on your question paper. Okay, in a little corner at the top or something, these rules, so that you can just glance at them to know which column they go into. How do you do that? Basically, for each of the accounts in your trial balance, because you write or you list all accounts that the business has, so there will be a long list, and then there will be an amount attached to each item, a financial or monetary value, because that is what we deal with for the accounting language. For each one, you just identify which one of Alice it is, the assets, liabilities, income, capital, or expense. And for the assets, you're just going to put it under the debit column. Same for expenses, all assets, all expenses. For each asset, each expense, write the amount, the relevant amount, under the debit column. And for your liabilities, income, and capital, you will write the amounts or enter the amounts under the credit column. So there you see it, the steps. First thing, jot down the rules. Very simple, just like this. It doesn't take much time. Second thing, identify which one it is. And then the last step in terms of entering the balances would be, once you have identified, you look here and you would know that it is a debit. Or you would look liabilities and know that it is a credit. You just keep on repeating those steps, step 2 and step 3, identify, right under the relevant column. You do that for all of your accounts. All right, so once again, you see the assets and the expenses would be the 2 that go under the debit columns. You're not supposed to see anything else really. The majority, assets, expenses, all the other items will be under credit. All right. So here we have an example. And remember, so we are doing this, but what I don't have would be the amounts. So first, what we are going to do is to see, and we're just representing it with an X for now. The X represents, X marks the spot, which column you write it in. So the first step, remember what I said to do, jot down the rules. So there we have our rules. And then we go to step 2 for each account, identify the category. So for example, you have land identified as an asset. And if it's an asset, that means it goes under the debit column. So we placed our X there. Nice. So we're just going to go through. So as I said, land, asset, debit. So you put it under the debit column, represented by our X. for now because we don't have monetary values for this one. All right, so fixtures and fittings, you see in our example, asset, so debit, and that is why we have the X here. Going to give another example, other than I'm not going to go in order here because that will be giving you all of the answers and I want you to go off and try it on your own. But I'm just going to point out some that may give you trouble. All right. But before that, this is really easy. Next example, I'm going to give wages and salaries. So where's wages and salaries? This one here. What is that in Alice? Which category of account is it? It's an expense. And as an expense, very easy, it is debit. So you will put it under the debit column. Good? All right, so let's see. Let's see sales. You can think this out whilst I am asking about it. Sales, we identifying the category. Which one of Alice is it? Sales is income. So because it is income, what does it state here? It will be placed in the credit column. So when you have your values, your amounts, the amount will go here, not an X. We only have an X here representing which column because we don't have values, okay? Purchases, purchases always the opposite of sales. So purchases is an expense, and as an expense, it will go under the debit column. So that is basically it. For the majority of it, that's all you do for each one. You go to inventory, which one of Alice is it? And if it's an asset, you put it under the debit column. If you find a liability like bank loan, for example, bank loan is a liability, so it will be entered under the credit column. Very, very simple. Simple as that. There. Discount allowed is still easy once you know which item it is. So discount allowed, expense. Some of you still may not be too clear on that. That is why I'm doing it here with you now. So discount allowed is an expense because by allowing a discount, that means that you will be receiving less money than was the worth in terms of, say, your sales, your credit sales. So that is like written off like an expense to the business, right? So discount allowed, which you would have done in the cash book, discount allowed is an expense. And as an expense, you just simply go and put it under the debit column. And then of course, discount received is the opposite, but just think about it. We are supposed to pay a certain amount of money, but they give us a discount or we receive a discount, which is like getting back or earning the revenue back because we are paying less than we actually owe them. So it's like we received money, right? Or we received revenue. So discount received is income or revenue, and therefore, which column? It will be the credit column. So now if you didn't know before, or this can just be revision, discounts allowed is an expense. Discount received is revenue or income, according to Alice. So this would just tell you. The assets are usually really easy to identify. Liabilities, usually easy to identify. You'll sometimes have problem with the expenses and the revenue income, which we did too just now. The discounts allowed, you might have a little trouble. Income, once it ends with received, discount received, rent received, commissions received, interest received. You get it? Right? That is income and revenue. And of course, you should know now sales is income. All right, so those are just easy. Identify them as income, credit column, expense, debit column, assets, debit, liabilities, capital, credit. Just giving you two more examples. Bank, you will know what bank is. It's an asset, so therefore it will go on the debit. And bank overdraft is the liability, so it will go on the credit. All right, just wanted to show you guys the difference. The reason why I have an asterisk there is because in a question, you will either see bank or bank overdraft. You're not going to see both of them. But for this exercise, I put both for you so that you can see that bank is the asset debit column. So once there's a bank account, it will be debit column in your trial balance. Bank overdraft is the liability. Now, some questions, what they have done, if they are giving you the trial balance, so you don't have to prepare it, they will have bank, so the word bank, but then you would see the amount on the credit column. You will then have to know, because we are doing it now, that if you see the word bank, so they didn't put bank overdraft, they put bank, however the amount is on the credit, that means that is a bank overdraft. Okay, so you're not going to have to deal with that here now, but in the future, so just giving you a heads up. All right, here, nice and easy, bank account, debit column, bank overdraft, credit column. So capital and drawings. Now, if you look here under Alice, you see capital, but there are only two accounts for capital. There is the capital account, so that is obviously capital, and that is for when you increase capital. So that will be the credit. However, you're not seeing anything there for drawings, but drawings is a capital account. Does that mean that we say drawings is a capital account credit? Nope. And this is why I said that there are at least, well, I think it's about three, but mainly two items that is not just as easy as the steps for the majority of them where you identify and you just automatically go to the side. So for capital, capital is still easy. It is capital, so you go on the credit side. Drawings, however, you identify it as capital, but it is not an increase in capital. It is actually a decrease in capital. So you can't put the credit, because remember, all of these are for the increases, which all the other items was doing. It's just that because we open a separate account to show the decrease in capital, because all of these show both increase and increase. Your assets show both increase and increases. The liability, they show both increases and decreases. They all do except capital. Capital only shows, the capital account only shows the increase, and we opened a separate account called the drawings account to show the decrease. So drawings, once you see drawings, that will not go automatically on the credit column, even though you identified it as a capital account. As it's a decrease in capital, it will go under debit. Debit column. All right, so that one is the one of those that you take note of. So when you see drawings, you're not going to see it up here. Yes, you're going to identify it as capital, but it is not automatically going to go on the credit side because it is a decrease in capital. So it will go on the debit side, right? Just a tiny bit more thinking in terms of that. All right, and here's the easy way that I remember it. C, capital credit, C. And then D, drawings debit, D. Okay, so that is a nice and easy way that we can remember it, and that's all there is to that one. So that is just one drawings. It's just one that you just kind of have to memorize a bit more, and just don't follow the lead of all the others and just go on the credit side. Decrease in capital for drawings, so it will be a debit. Drawings always debit. Opposite of capital, so capital is the credit, drawings is the debit. So we have another one, the return inwards. Now, return inwards can be looked at as two things. When we talk about return inwards, what is being returned? Not money, but inventory. Inventory is an asset. So we can look at it as return inwards is an asset. And as an asset, which column are you going to write it in? It is going to be the debit column. So when we're looking at return inwards, we can look at it as an asset, and therefore the account is a debit account. Another way that you could have looked at it is that when you do sales is income, right? But when the goods are returned to you, that is like losing income. You have less income that you're going to get in the future because they returned it. They no longer have to pay. You are no longer going to receive that income. So if you look at it as income that has decreased, you lost income, then it will be the decrease in income, which is a debit. So it will still end up on the debit side. So whichever is easiest for you, I sometimes just go simply, it's the opposite of sales. So if sales is a credit, this is a debit. The other easy one, it's an asset. They returned inventory. That means you got back some inventory. That's an increase, so that will be a debit. Nice, okay? What happens though with the return outwards? It's still an asset. That is how we're going to look at it. It's still an asset because we're dealing with inventory. But in this case, what happened to the inventory? Did we increase? No, that is return inwards. That means that return outwards or purchases returns is therefore a decrease in inventory or decrease in the asset inventory. Whenever an asset decreases, what happens? It goes in the credit column. So this is how you can remember this. Here's another real easy way. Just know return inwards is a debit. Return outwards is the opposite of return inwards, so it will be a credit. Once you learn off return inwards assets debit, just do the opposite for returned outwards. All right, nice, easy, good. So that is basically I gave you some examples. Of course, I cleared it off because I want you to go, remember you follow the steps, step 1, step 2, step 3. There are 2 more. I didn't put it here up in terms of highlighting, but you see carriage inwards and carriage outwards. Carriage inwards is money that the business pays to have goods brought in. So when we purchase inventory, for example, we also pay for it to be delivered to us, right? We pay extra. It's kind of like when you order on Amazon and you have to pay shipping and handling. Who is paying it? We are, whoever did the order. So that would be what? If we are paying it, that would be an expense. Now you might think carriage outwards is the opposite. It is only the opposite in terms of what you're paying for, but they are still both payments. Carriage outwards or transportation outwards is when you actually deliver the goods to the customer. So you bear the burden of the cost. The customer is not the one that is going to pay. We, the business, takes on that expense. So both carriage inwards and carriage outwards are expenses. It's just you're paying for a different service. Carriage inwards, you're paying to have the goods or inventory brought into the business, whereas carriage outwards, you're paying for the inventory to be delivered out of the business to the customers. Okay, we're just going to go through it really quickly. So we have motor vehicles as an asset, therefore assets debit column. Inventory is an asset, so definitely debit column. Receivables asset, so debit column. You will know that by now because we only have assets at first, debit, so you're doing the same thing over. Now we have an accounts payable, which is not an asset. It is actually a liability. So which column are you going to enter? Credit column. And then we have bank and bank overdraft. We did that, but do you remember? Bank, asset, debit. Bank overdraft, liability, credit. Cash is an asset, so debit. Bank loan is a liability, so credit. Mortgage is also a liability, so credit. Sales, as we said, sales is income, so that will be credit. Purchases is an expense, so debit. Return inwards, what we just said, it's inventory being returned, so that is an asset, or a loss in income. Both translate into a debit. Return outwards is the opposite, so just go and put it on the credit side, but just for your notes, if you want to know, return outwards is a decrease in assets. It can also be seen as a decrease in expense. We pay, so when we purchase goods, right? We purchase goods, that is an expense. But if we return those goods, we no longer have to pay that expense. So that means our expenses are reduced. If your expenses decrease, that will be credit. So however you look at it, whether it's a really easy thing that return inwards is a debit, so return outwards is a credit, I think that's the easiest one. Or if you look at it as a decrease in assets would be credit. Or you look at it as a decrease in expense would be also a credit. However you get there, make sure and put it on the credit column. All right, so discounts allowed, we did it. Expense, which is a debit. Discount received. Income, which is a credit. Notice that, well, these two are opposites, so they're never supposed to be in the same column. Carriage inwards is an expense, so debit. We said that carriage outwards is also an expense, so debit. Rent is an expense, so debit. Wages and salaries, expense, so debit. Insurance, expense, so debit. Interest on loan, that is the loan is the liability, but once you see interest, it's a nominal account. So since it's interest on the loan, we are paying that. That is an expense. Expenses are debits. Commissions, expense, debit. Rent received. So that will be income. So rent received, income, and what we do with income, credit. Commissions received, income, credit. Interest received, income, credit. Electricity, we pay for that, so that is an expense, debit. Capital is a capital, it is an increase in capital, so you automatically see credit. So you put capital here, credit. And then drawings, even though it's a capital account, it is a decrease in capital, so that will be debit. So after you have done that, the last step, so you have just entered, you have done steps 2 and 3 for each one. There is one more thing that you have to do with all of your balances. It's called a trial balance. Once again, to balance something means you have two items. What are the two items or totals? Total debit, total credit. Okay, so total debit and total credit. You now have to add up all of your debits and see what answer you get. So after entering all the account balances, step 2 and 3, you're going to add up your debits, get a total, add up your credits, get a total, and the totals should be equal for the trial balance to balance. So just going through that again, this is your answer. So you can just take a look at it, make sure that you're seeing it and everything. That's it. And there is something else that I will just point out to you. Our examples at first, all of them are given all of your balances. So we are given, or we give you, the examiners give you all of your balances. But you may come across the question, and you will come across a question like this when we go into trial balance at a later stage when we are dealing with the financial statements. But if you do not see capital, there is always capital. So once you do not see an actual amount for capital, or you don't even see the name of the account, you're going to put capital in your trial balance. And how are you going to find your capital? Simply add up your debits, add up your credits, and minus your total credits from your total debits. Why? Because capital is a credit figure. So the credit figure, the missing figure, the missing amount is going to be a credit amount. Okay, one that goes under your credit column. So this is just something that you have to note. And as I said, later on when we go into it more, capital figure is your opening capital. Just introducing it to you, but you don't need to know that right now at this very, very, very point. But introducing it, it will become relevant when we are doing the balance sheet from the trial balance in the future. And then one other thing to note, and once again, this is not going to be relevant as much until later on. So the inventory in the trial balance is the opening inventory amount. So when you see, we saw inventory and we put it as debits because it's an asset, that is your opening inventory. Your closing inventory, which is the one that goes in the balance sheet. Remember, you guys would ask me that when we were doing the simple balance sheet, which inventory it is. Well, you will be asking me that a lot more often in the future because we will need to be able to distinguish between the two. That is found underneath your trial balance. So your closing inventory never goes in the trial balance. That is your opening inventory. All right. And the closing one that goes in the balance sheet that is relevant for the balance sheet, you will usually see that underneath your trial balance in what we call additional information or the notes to the accounts. So this is just giving you a heads up. For your activities, you don't need to know that. What you need to know when you are preparing the trial balance, just remember the steps. First step, jot down the rules for the increases because the majority use the increase only. Debit assets, debit expenses, credit, all the rest. Then for each account, you just identify what it is and then put it in the relevant column. All right. And after you have finished doing that for each one, step 2 and 3, last step, you balance where you add up your debits, add up your credits, and if they are correct, that means that it has balanced. Okay, so if they are equal, I should say, that means all of your entries are correct and it has balanced. If, however, they don't give you capital, that means that you wouldn't know whether it balanced or not. You're just going to have to trust your answer and find the missing capital figure from whatever your entries were. And how do you find it? You will add up all of your debits, put that as a total, and then minus your total credits. To find capital, put that amount next to capital, and then when you add up all of your credits, including the capital figure you just calculated, that should be equal to your debits. All right? So very, very, very simple. With your example, just follow the steps and you will be good, right? Here highlighted are just the few that is going to give you a little bit of trouble. Notice it's only 3 items. All of these others is a simple thing, just following these steps where here we already have our notes, and then you just go and you identify and put under the relevant column. These 3 might take it a little bit more, you know, just a little bit more, but that's it, right? Drawings is easy enough. The debit side, very good. And then once you know return inwards, once you learn that off, then you will know return outwards, or vice versa, okay? And then your last step would be to balance. Just remember, if there's a missing capital figure, your debit column is supposed to be equal to your credit column once you have all of your balances, like your capital. If you do not have your capital balance, then you will just have to calculate that missing figure by total debits minus total credits. And then what you will go and do is just put your answer here, and that should make your credit column equal to your debit column. It's just like balancing an account. You know, where you find a missing figure, greater total, which is your debit side. Missing figure would be that total minus everything else. So these 2 totals, what you can do is just like balancing an account. Add up your debits, put the total here, then go to your credit column, put the same total, and then work upwards to get the missing figure. This is the activity that I have given you, and we can go through this very, very, very quickly for the next lesson. But just remember, you just have to go and follow these steps, and do the 1, 2, 3, and then at the very end, just total debit, total credit, balances, you're good. All right, so till next time when we correct this, have a safe day.